All right, welcome guys to our CRT 5 AM model full Forex course. Right, in this class, we're gonna talk about ICT essentials. Right, everything you need to know about ICT. I gonna spare you a lots of hours of content of ICT. Okay, so I can to teach you what exactly you're gonna need and not a lot of nonsense and bullshit, right? So we're gonna dive deep to this to we can align, everyone's knowledge, right? So we need to have a base, and this ICT essential, it's a solid base, so it's important to us all know what this is about, right? So you can call it SMC essentials if you don't want to use ICT as well. But quite the same thing, right? So before we dive into the content itself, okay, I want to remind you the like button is for free. So make sure you hit this like button, all right? Don't forget to subscribe to the channel. That's very important, right? Plus, we have a Discord community that's totally for free. You can join by link in the description, right? And there we have a live room every day and a swing trade room, and you have a 3-day free trial. Okay, so you can enter in Discord, enter in the community, and enjoy the Discord and get yourself the 3-day free trial if it's worth for you, right? So you can test the rooms, and if it makes sense, you can continue. It's gonna be great for you and your advance, right? So we're gonna talk about a lot of topics here, but we're going to start with the most easiest, right? And going for the most complex one, right? So the first topic we're gonna talk about here is this one you guys probably know about. It's boss, or if you're not familiar with it, it's break of structure. Okay, so what this exactly means? Okay, so boss or break of structure. Okay, we're gonna dive into more deeply in structures, right? But basically, when you have a structure, okay, and I will make this black, okay, you have a market structure like this, okay. Every time you break a high or break a low in a continuation sense, okay, not in a reversal sense, in a continuation like here, and then come here and break it, like you come in high, you correct, and then come high again. This here is your break of structure, okay. That means break of structure, it always indicate a continuation of the trend or continuation of the flux, right? Of the flow of the charts. So break of structure, aka boss, it's a continuation sign, okay? Every time you had a boss like here, it means the price is getting higher and higher, or in this case right here, lower and lower, okay? You can see the boss by this line here once we break the highs or we break the lows right here. So I'm gonna paint this as a red line, okay? Red lines right here. This is the boss, right? Or you can observe as well, if you want to have more confluences to your continuation, you can see here, right? What this means. You have higher lows and higher highs. Okay, so low, high, higher low, higher high, higher low, higher high, right? So you see the trend. Okay, same case here. You get this high, high, high. You get this low, 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 low. You have a low, you have a high. You have a lower low, lower high, lower low, lower high, lower low, and so on. Okay? So boss, it means continuation, right? And for the continuation, in the other side, you have what? Oh, sorry. You have what in the other side? And this is our second topic, is our CHOCH, right? Or MSS, as I prefer. It's more simple. Okay? CHOCH, it means change in state of delivery. And MSS means market structure shift. Okay, I'm not gonna write it because it took so long time. But this is change in state, is change of character, sorry. Change of character. So CHOCH, change of character, right? CHOCH. And MSS, it means market, structure, shift, and it's the same thing. Okay, so for I illustrate this for you guys, how this plays out, like you already know the continuation, that's the boss. So now we can go to the reversal, right? And the reversal, you get your structure right here, right? And once you break here, then you have your CHOCH or MSS, whatever you want to call it. And this here is the line you are looking for. Okay, and why is that? Because you have here your higher lows and higher highs. Okay, so in this point right here, okay, what is your last low? It's this little guy right here. Okay, so once you break this guy, you now change your flow, change your state of delivery of the price, you change your flux of the price to a downtrend. Okay, we're gonna use this a lot for confirmation entries. Okay, once we break this low right here, this protected low right here, okay, we reverse our currently trend. Now we have a bullish trend right here, then we break this low, this last low right here. We're going to see we have some more rules to validate this roll, this low right here, right? But for now, once we break this low, now you have your market flow orders going down. Okay, so this is your CHOCH. Okay, this little guy here means your CHOCH. Right, pretty simple. Can be tricky, yeah, but it's simple, right? If we need to see something in real of this, okay, we have example, right? We have a higher high, okay, high, low, high, low, high, low, okay? So market's doing this, high, low, high, low. Once we break here, we have our CHOCH or MSS, whatever you want to call it, okay? And so from now on, we have the boss right here for continuation, okay? It's that simple, not hard at all. And I spend you a lot of hours watching ICT content, right? So anyway, I deserve a like. Just leave it a like. Okay. Changing state of delivery, right? It's almost the same thing as the MSS, okay, but it's a little more detailed and microscopic way to see the MSS, right? And why is that? Because the changing state of delivery, it's a sequence of up close or down close candles. Then once you lose it, okay, your state of delivery or your flow, it will change. It's a way to anticipate a little bit the market structure shift. Okay, like in this case right here, we have the sequence of down close candle. This is the 4 hour. Okay, let me put this in 50 minutes. Maybe it's better to see because we we're going to have a more candles to see it, right? Let me see where. Okay, right here. I already found one that you guys can see, right? Right here. You have right here a sequence of up close candles, okay, or a down close candle. That's is easy to see. I'm gonna grab this example right here, okay. It happens all the time, but I will grab this example. Right, we have the sequence of down closing candles. We have one down closing candles, we have two, three, so we have a sequence of down closing candles, right? The candle who antecedes this sequence right here, in such case this candle, this positive candle that previews the sequence of down close candles, it's going to be your CISD, your change in state of delivery. And that's an important part because it's the body of the candle, not the wick of the candle. It's going to be the body of the candle. Okay. So if you like in the MSS, and you need to wait for this happens. Okay. And the structure in the structure shift, you need to wait for this week has been taken, right? Because it's your last low, is your last high, this guy here. In the CISD, you can wait for this previous candle, the end says the sequence of down close candles to be taken. So you're gonna draw a line in the body of this candle and wait for it to be taken. So you can anticipate a little bit, okay, the market structure shift, right? Instead having a trade like this, you can tie it up a little bit your stop, right? And have a better risk to reward in these cases. Okay, so this is very usable. CISD is quite advanced model. It's not even a model, but it's such an it's advanced concept. All right, CISD is not as beginner friendly as the market structure shift, but it's the sequence of down close candles, and the previous candle, the high candle, is your CISD. And it's the same way for up close candles, okay? It's just reverse, right? So now we talk about the CISD, which is a very important thing, right? So where is my drawings? Right here. Okay. So now we need to talk about breaker blocks. Okay, and the breaker block, let's draw the structure again. Okay, this is important. We have the structure and we have our MSS right here, or CHOCH, whatever you want to call it, right? We break it and we come back, test this zone right here, and then continue to pushing down or to pushing up. Okay, the breaker block is the block of orders, right? In this particular region, this region that makes the CHOCH, the MSS, whatever you want to call it, you're gonna see, I'm gonna show you, right, is this region that price most likely come back, retrace it, and test it. Okay, so you have this level right here, this important level. This is the breaker block, is the block where the price break and come back to test it. Break, in this case, this MSS right here. Okay, so let's find example of this in the charts so I can teach you guys this properly. Okay, right now we have right here. Okay, we have, I want to show you guys this. Okay, we have way up, boss, and now we have our CHOCH right here. Okay, and we have a retest. Right, we have the retest right here, but not going into the details. But anyway, the CHOCH or the MSS is right here. A structure shift is right here. Okay, so what you can observe here, what is the block that make this price break? And I mean the block, I mean the candle. Okay, so in this case, the breaker block, it's going to be this little guy here. Okay, so you can at a rectangle in this entire candle right here. This block of candle makes the low, right? And once the price break it, it immediately come back to test it. Okay, so this is a breaker block. Some guys can refine this breaker block for this breaker block. It's also fine, okay? As long as you understand there is a block of orders right here. And once the price break this block of orders, okay, that's going to be your retracement zone for the price. Okay, so you see the price test this zone right here twice, once here, then come back, test it again, bounce it down, and then continue the trend. Right, so the breaker block, it's an important region, right? So the next, I can stay around here because we're gonna talk about fair value gaps and inverse fair value gaps. Okay, so fair value gap is this gap that happens between one candle. We have three candles in this case, okay? We have one candle, two candles, and three candles. So the fair value gap is the gap that happens between candle number one to candle number three. Okay, you see in this particular case, we have a gap from here to here. Okay, this gap here. This is important. Okay, this is a fair value gap, right? And what does that means? It means in this region we have liquidity, right? Because the whole ICT traders are going to shorting in this shit. Okay, such as the fair inverse fair value gap. But anyway, it means we have liquidity in here. So the market makers know for sure there are going to be a lot of players selling on this fair value gaps. So what does that means? It means liquidity. For what? For execute orders, right? So they know the most traders are going to sell here, right? As the ICT teaches, gonna sell here with the stop here. And what most happen in a fair value gap, and you're gonna see it, if the price touch the fair value gap, right? Grab the liquidity of the fair value gap and then distributes. It's very common. So fair value gaps mean liquidity. Okay? Yes, we can do entries on fair value gaps, but we need to have confirmations to do so. Okay? So said that, is this important concept, the fair value gap is the gap between the candles. Okay, candle number one to candle number three. This candle number two provides us a gap right here. And this is our fair value gap, okay, which means liquidity for us. Okay, good entry spot. And in other hand, we have the inverse fair value gap that is literally the inverse, right? So here we have the fair value gap. In the inverse, you're going to wait for this fair value gap has been taken, right? So here we have a perfect example of inverse fair value gap. Okay, we have a fair value gap right here. That price break this fair value gap and reverse it, right? Which means more liquidity for runs. Okay, because once I told you we have a lot of ICT traders buying here, going long here, right? And put their stop loss right here. So ICT traders got long from here, right? Price push up a little bit, tricky than all, and then push lower and lower, and then trigger all those stop losses right here. And what happens to the price? Boom. Right? So inverse fair value gaps are perfect entry zones for us. Okay, because it will accelerate our price movement. Okay, so inverse fair value gaps, you're going to see me using a lot for entries because it's the most efficient way without a confirmation, without a structure shift. Okay, is the most efficient way to use inverse fair value gaps for entries. Okay, so this is the inverse fair value gap. Very important for you guys to know this. Okay, So BPR, I gonna to maybe dig a little bit to find a BPR because it's not too frequently to happen. But a BPR, what is a BPR? Right? It's a balanced price range. And what does it mean? You have a balanced price range. It means that you have an inverse fair value gap with a fair value gap. Okay. Um, let me see. I saw a BPR today in somewhere. I don't remember where. Right here. Right. It's a little tricky to find BPRs, but we have BPRs. Right. Here we have inverse fair value gaps, and here we have fair value gaps. Right. So what does that mean? Like you have the fair value gap right here. Okay. And you have an inverse fair value gap from this candle to this candle, right? Because this only provides us a gap right here. So we have this inverse fair value gap right here, right? And what you have here in this conjunction right here is the BPR, is a balanced price range. Once you have the inverse fair value gap with the fair value gap. And this is a very, very, very powerful entry, okay? As you can see right here. Look how the price reacts in this area. And this is a 4-hour time zone, time frame, sorry. 4-hour time frame. Look how the price reacts on this type of area. Okay, so balanced price ranges are magnets and are very strong for retesting areas. Okay, balance, sorry, price touch here, touch again, touch, didn't break through, and then distribute lower. Okay, so BPR are very important regions for us, right? So other concept that's very important and misunderstood by many of people is order blocks, right? I'm not going deeply what is an order block, right? But an order block, I can say, and I can see here where is our block, is this little guy here, right? And you must confusing like, oh, I learned order block in the other way. That's the like the opposite candle before the impulsive lag, whatever. So that's wrong. Okay, the order block means the block of orders who creates the manipulation, right? So you're going to seek the candle who creates the manipulation, and probably it's going to be a heavy candle or a candle like this with a heavy wick candle. This thick candle right here. Okay, this is going to be your order block. This block of orders right here. Okay, as you can see, it works perfectly fine, right? Because this is the correct order block. After you purge the liquidity right here, and this is our next topic, okay? After this liquidity purge, this manipulation, institutions leave us a footprint. And this footprint is where they put on their position, right? So they make their position on this region right here. So they spend a block of orders right here, spend a lot of orders creating this block of orders. So why? This is why it called order block, okay? Because it's a block of institutional orders who manipulate the price, okay? This is a very important concept for you guys. Said that, okay, we have the order block and we have the turtle soup that is this little guy that I marked here, okay? And the turtle soup is liquidity, okay? And turtle soup is the base of our trading model. The base of CRT is turtle soup, right? And the base of market is turtle soup, because turtle soup is about to grab liquidity, grab retail liquidity and distribute the price against it, right? So once you understand turtle soup, you will win the market for sure, okay? So turtle soup, ICT talks a little about it, barely don't touch about this subject of turtle soup, of grabbing liquidity, of fake breakouts, whatever you want to call it. Okay. Honestly, I don't know, because it's the most powerful tool, powerful way to trade is turtle soup, right? You wait for a liquidity grab in a key level, right? That we're gonna talk about key levels in a specific lesson, right? But for now, you must know this is a high, and we have liquidity on this high, right? Retail trader trying to short here, and retail trader trying to long here, right? Both are wrong. If you're trying to long here, you are a dumbass. If you're trying to sell here in this high, just this is a resistance, I'm gonna sell here, you are dumb as well, okay? Because you're going to be wrecked, as it happens right here. Because all the smart money players are know about that. There's gonna be people longing here and gonna be people shorting here. And what they're gonna do is they're going to manipulate this liquidity and then push the price whatever they want, right? So this is the turtle soup, right? And the last concept we will talk about is the draw of liquidity. Okay, draw of liquidity, aka DAO. Okay, draw of liquidity is the target. Okay, for this kind of operation right here. So you have your turtle soup. Okay, you have your order block right here, and I'm going to just mark the order block as I usual do right here. So you know this is the bottom of the order block. You get your retest right here, and you get your target, that is this liquidity here. So the draw of liquidity is the next target liquidity. So where these players are going to dump this contract, they are accumulating here in the next liquidity spot that is here. Okay, so every exit is an entry, and every entry is an exit. That makes sense for you? Because they need liquidity, okay, and a market here as DAO, okay, draw of liquidity. They need this liquidity to make their profits, right? Like here you have a DAO, right? Because what? You have turtle soup this low right here, okay? Turtle soup, grab the liquidity. You have what? You have your order block right here, okay? I'm gonna leave this here. You have your order block, the candle who creates the manipulation, okay? You have retest of the order block, and then you distribute the price until where you have liquidity, and this is this point right here. So this is your DAO. The DAO, it's going to be your target, okay? It's the next visual liquidity that players going to dump their contracts, okay? So this is the basics for ICT concepts, okay? I guess is all you guys need to know. Of course, we dive into very quickly, right? But I guess it's very complete about all these types of entries and stuff. So this is all the concepts, the ICT essentials that you must know to keep going to this course, okay? And I will ask you again, if you're not joined the Discord, go join the Discord. It's free. Our community is free. You can have a 3-day trial for free, right? Testing the live room and the swing trade room. It's up to you, okay? But that's it for today. So lesson 3 is here, and wait for lesson 4, right? See you guys in the next video. Bye bye.